that USDA doesn't just go for steak? Carman here, your not-so-secret agent, coming at you from ERA Freeman Associates, serving the greater Portland metro area. If this is your first time, go ahead and hit subscribe, ding the bell, and you'll be notified when I post bonus videos just like this one today. So, my buddy Justin came into the office the other day. We spoke a little bit about loans. Check it out. Hey guys, my friend Justin Therrien is here. He's with Value Added Mortgage, and we are going to talk a little bit about loans and the loan process. Here we go. Justin, it's so good to have you here.
Thank you.
You're one of my preferred lenders, so one of the guys I love to work with. So let's get started. What is the first thing somebody should do when they want to get a home loan?
Get pre-approved. Talk to a lender, yeah, definitely. It helps to, what I've seen sometimes, if you don't do that first, you'll get into the process and sometimes even into contract without looking at the numbers, and then they freak out when they look at those numbers, because buying a $300,000 or $400,000 home is very expensive, and the monthly payment's higher than you thought it was, and all that stuff. And also, you want to make sure that you can actually get a loan, so that you're not spinning your wheels for no reason.
So what I'm hearing is that Zillow may not always be correct when it comes to the mortgage estimate. Sometimes,
but sometimes
maybe not. Okay.
Right.
Awesome. So, is it for you? Is it better for them to just call you, or do you have a website?
Calling, definitely. Yeah. I just, either calling or meeting. It's easier to cover everything and to have an organic conversation. I think it's more educational that way, rather than just going to a website and filling out an app. You may have no clue what you're doing or what to expect. All right.
And you guys, check out the comments below for Justin's contact information. There are several different types of loan products. We have heard conventional, FHA, USDA, and VA. In short, what's kind of the difference? Which one's better?
It just depends. And news, they just increased the, they're increasing the loan limits for conventional loans too. It was 484, 350, and now it's going up to above 510,000.
Nice.
Yeah, for our area. So that's awesome.
That is good to know.
As far as what is the best loan, I like VA loans the best. They're great loan products. Conventional loans are great. FHA loans are great. USDA loans are great. But I would say VA, conventional, USDA, and FHA. Some of the USDA has some downsides to buying power specifically. It really caps you on what you can buy. They really want you to be, they use the verbiage modest a lot in their guides. And they don't want you to buy a big fancy house, so they kind of limit you there. And then FHA has lifetime mortgage insurance. It never falls off. While it's a great product, it does have some downsides, and that's one of them. Conventional, I would say it doesn't always have the lowest rate, but the mortgage insurance falls off. If you have a down payment, it's usually the best product. And then VA, great rates. The only downside with VA is they have a funding fee that gets added on top of the loan. If you're 10% disabled or more, then they waive that, which is awesome. That's like the best loan product ever, right there.
And of course with VA, you have to be a veteran.
Yes.
Now I've heard you have to be married, or it has to be two veterans getting the loan together. You can't have your girlfriend, boyfriend, or dog sign on the loan with you.
Well, you can, but you have to bring in, because the VA will guarantee, I forget the dollar amount, but I believe it's 25% of the total purchase price. If let's say that my partner and I are buying a home and I'm a veteran, and they're not, but we're not married, we will have to bring in that 12.5% because they won't guarantee that whole amount. So you'll have to bring in a down payment. Great loan product still, but
now you have to have the down payment. Right? That makes more sense. Awesome. When you're going through the loan process, I know that you're constantly asking for documentation. What should somebody expect to get asked for, and how many of those times should we be expecting to be asked for documents?
I would say that my list of things is typically 2 years of tax returns, so 17 and 18 right now, 2 years of W-2s, 1 month's worth of current pay stubs, photo ID, 2 months of bank statements, and any other, like if we're using a 401k for their down payment, I would ask for their statement on that. But that's really it. And a good lender, or any lender, should ask for all of that in the beginning.
Okay.
Like, not for the pre-approval necessarily. I typically will ask for the taxes, a pay stub. I'll talk to them about their down payment and make sure it's coming from a good source that we can use. But definitely once you're getting serious, I would, you want to get all that information at that point. Yeah.
Awesome. Let's talk down payments.
Sure.
What should we look at for a down payment? Now, I know VA, as long as it's a veteran doing it and we're not doing that 12.5% for the partner.
Right.
What are we looking at for a standard down payment?
I would say 3.5% on FHA is the minimum required, 5%, sometimes 3% on conventional, but more often 5%. I typically would, if I were to just say one number, I would say 5%, at least.
Okay.
The more the better though. If you have 10%, because the way it works as far as the credit, or the interest rate goes, it'll change with each 5%. So if you have 3%, the rate, if you only have 3% down, the rate's going to be worse than if you had 5%. Those are two tiers, you could call them. And then it changes again at 10%. You'll get a better interest rate typically. 15%, 20%, so on and so forth. So the more the better, but I would say 5% is a good number to shoot for, but you can get into a home with as little as 3% on a standard product without down payment assistance grant, things like that. Yeah.
So I did a video a while ago that talked about the 10 commandments of what not to do when doing, when getting a home loan. Let's talk a little bit about that. So we know there's some big ones. Don't buy a car, don't buy anything with credit, don't use your credit cards, don't pay off anything, like just essentially, what are your what's your advice?
Yeah, don't buy a car, don't buy anything, because what we look at as lenders, it's not the dollar amount that you borrowed necessarily, it's the monthly payment, because that's what everything comes down to, is your monthly reoccurring debt, right? So don't buy, especially cars, they're the worst.
They're the worst.
They can have $700 payments and your buying power can be obliterated by that. I've seen that happen. I would say maybe some that aren't as common. Don't close your credit cards. I had a client come to me one time that they were getting ready to buy a house, and his wife had said, "We're going to buy a house. You need to close all those credit cards, pay them off and close them."
Oh,
and his score went from, it was somewhere like 740, it dropped to like 640. He lost like 100 points because he closed all of his credit.
Oh no!
Right, so don't do that.
No.
Pay it down to 0, but don't close it.
Yeah.
What else? Changing job, like pay types.
Yeah.
Like if you get a promotion at work, that's usually awesome. But if it's a promotion that takes you from being a salary employee to a salary and commission with more potential, that could be really harmful, because if your salary portion drops, then it's going to impact you.
Yeah.
We can't use the commission type income until we have 2 years of receipt of it. What else? Divorce. If you're going through a divorce, don't try to buy a house right away, because, or you can, but you need to have an understanding on what that might, how the financial pieces of that could impact you.
Well, it sounds really like what they should do is, if you're making any changes to your credit, talk to your lender beforehand. Like,
Definitely.
come talk to you and say, hey, this is what I'm thinking of doing.
Right.
And I think the sooner you get a lender involved in any type of situation, the better. So,
especially if you have credit that you're trying to get up.
yeah.
Talk to me specifically. I would love to help. That is, don't do it on your own. Talk to someone who knows what they're doing, because you could spin your wheels for 6 months and not get any traction.
Yeah.
And I've helped people get there. I had my record is, was it 57 points in 3 days?
Oh, wow.
We got 57 points in just 3 business days.
Oh, wow.
Yeah, so that's,
Nice.
yeah, you don't want to do it the wrong way, because it may not work.
Yeah. So what I'm hearing is, if somebody thinks they're a year to 5 years or whatever out, still come talk to you.
Yes. The sooner the better, because then you can kind of game plan and take the right actions, because taking action is good, but especially if you have a goal in mind, you want to take the right actions that get you the most bang for your buck.
Awesome.
Definitely.
Awesome. Well, Justin, I want to thank you so much for coming and answering all of our questions. As I always say, lending is above my pay grade. It's a magic I don't understand. So I leave that to you to do.
Thanks for having me.
Yeah, so great. And I'm sure we will have you back again once I think of more questions and more specific.
Definitely.
So,
I'd love to.
Awesome. Thank you.
You're welcome.
Thank you again so much for watching. It's always a pleasure. Again, if you haven't done so, hit subscribe, click the bell, and see you next week. Oh, actually, see you tomorrow when I post my regularly scheduled video. Until then,